What's up, everybody? Okay. Good energy in the room. Drop the location, please. Anybody ready for the room going out for straight, please? Trying to get kind of good contrast and rotation. Okay. I am. Okay. I made a decision. I'm sorry. It's gonna take a minute. Give me a minute. Give me a minute. Sorry. Hello, hello, hello. Just trying to get this set up. I'm gonna be going over this indicator today, and I'm really going to be showing how it works, going over my little strategy with it. Of course, it's the weekend, so only crypto is open. So this is just where I'm gonna be breaking down the best trades to take with it, and how we can make some money off of this. It's really simple. It's really simple. It's really simple. But so when it comes to it, sorry. I'm a rolling stone. All right, I'm sorry. Like I was saying, when it comes to it, there's only a few things that you really like need to keep in mind. There's only a few things that we really need to keep in mind. I'm gonna type it on the screen just so it can be better understood. Actually, I'm gonna move this right here. So one, we're going to want to check the MACD and make sure that the MACD, let me make this look a little better. And feel free to ask any questions. We want the MACD to have a cross. Either, I'm just gonna have a cross, and that's gonna be 1. 2, why did it do that? This is making me mad. All right, boom. For 1, we're gonna want the MACD to have a cross. 2, we're gonna want the transition, a smooth transition. So I'm gonna say that we're gonna want a smooth, crap, why is everything in caps? A smooth transition. So it's, what I mean by that is, like, let me see, like right here, you see in this MACD how it's a nice curve that came with it. That's kind of what you want. Those are the better signals. It'll give you a better chance of hitting like TP3, TP4 on so on and so forth. Like, it's not all guaranteed, but it gives you a better chance. Like if you look here, it had a rejection off of the EMA, like right here. The signal went all the way down to TP4 and a little bit further. So, and this is the hourly. So this ain't no 5 minutes. So where if it's just moved like this, then you only catching a couple of dollars. Like, no, move like this, you'll catch. You'll be able to get some money. So yes, like I said, you're going to want the MACD to have a cross. It's going to have the smooth transition. What's 3? Oh, you want it to be in the direction of the trend. 3, you want to be in direction of trend. And for the most part, hey, Alexander, thanks, bro. Thank you for the likes. Thank you for the likes, bro. And you know what? I'm about to say, user 44, he just shared it. Oh, I said join. Oh, you joined from the link. Thanks, bro, for joining, because I believe that you're from the Telegram group. But if you can share this, I'll greatly appreciate it. It'll help you get out to more people. I'm doing this for free. So if you can just like and share, it goes a long way. It goes a long way. So, like I was saying, yeah, so it's basically like anytime you get a signal, I really just look and wait until I see these three things. Now, if you want to trade bear market, you can still do that. One thing that I do not do, I never do, is just trade blindly. Why? Because what are the setups for the MACD? Well, the MACD works in alignment with the it works in alignment with, I don't know why I can't get my words out, with the indicator. And this is a paid indicator. It's called I'm gonna hit the settings. It's called TPA-OG. TPA-OG. You can only get this indicator if the owner adds you to it. This is not my indicator, but I've been using it for a little while right now, and I made pretty good profit. A lady the other day, she just hit the group and said that she passed her evaluation off of it. So you can't search it. It's an invite only to where you can even see it. So join my Telegram. If you can't join my Telegram, send me a message. Send me your username. I will add you. And then I'm going to send you the information on how to get it. I'm going to send you his information. But yeah, it's called TPA-OG. It's $50 until January. And then I believe that the price is going up. What the price is going up to, I don't know. But that's the little discount that I was able to give y'all until you just, if you wanted to get it. But I'm going to show you basically like how I trade it, because I still have my top-down analysis that I do. My top-down analysis like really help the process of like also understanding which trades to take, which trades to not take. I do all of my analysis on a higher time frame. This is the 1 hour. Actually, and I'm gonna be doing Bitcoin too. So I'm gonna turn the watermark on so you can see interval time. Boom. So Bitcoin, BTC, USD, 1 hour. How can I join your Telegram? Hit the link in my bio. Hit the link in my bio, and just go to the Trading Blueprint group community. Trading Blueprint community. But so my top-down analysis is basically there's 3 ways that you can trade. You can trade off of I'm gonna type it just so people can see it. You can trade off trend. You can trade off of support and resistance. Support and why is all caps again? I don't know. I know it don't matter, but it matters to me. Support and resistance, and then you can trade using indicators. Indicators that tell you how to buy in, how to sell, where to buy in, where to sell, stuff like that. These are basically the three ways that you can trade. So trading with trend would be something like this area right here, where it's just like, okay, I'm a trade with this trend. When it breaks structure, then I'm a sell out. In a case like this, it would have failed because it broke structure, but then it continued to go back up. Trading with support and resistance, I don't know why it's an F in there. It's trading with support and resistance is more so, all right, we got this area here, we got this area here. When price breaks out of this area, I'm gonna go down to a lower time frame, and then I'm gonna look for structure, and I'm gonna take a 1 to 2. Boom. That's how you do support and resistance indicators. Is boom. I like to do a healthy amount of all three. So what I do is I mark areas recently to where I've seen price react. Let me see if I can lock this. Lock, boom, okay. I want to test it. Erase. Remove. No, keep them. Yay, okay, I can know how to do it. All right, so, let me see if I can move. I want to move this. Oh, it's locked there. Oh, well, that sucks. But I guess, price ain't really going nowhere, so I can have to leave it there. So what I do, the way I tell which indications I want to take is recent price action. Boom. So I'll mark here. And these lines aren't absolute. I say it every time. These lines are not absolute. They mean more of like zones. These lines like a zone. So technically, honestly, if I wanted to, I could have just put this square here because, it's within this area. It's within that area. So, but boom, that line, because I see that price had 1, 2, 3 rejections right there. And then let's just also use, of course, we're going to use, where would I put this zone? I'll put this zone like right here. Boom. That's the next zone. And of course, we have another zone here. And lastly, we have a zone here. There's like other menial zones in there, but these are long or short long term. What do you mean by long or short long term? Honestly, I will upload this live on YouTube. I might as well. I need to get the YouTube game up, to be honest. But so weekly from now on. What do you mean? Like checking the weekly time frame? Yes, I'm gonna get into that. I'm gonna get into that too. But now I'm just basically breaking down how I take my trades, how next few weeks bullish or bearish. It really I have no idea based off of this right now. I have no idea. Overall, I mean, I said forex. Overall, crypto seems to be pretty pretty bearish. Overall, crypto seems to be pretty bearish. I feel like it's definitely may drop down to like the 70s and the lower 8s, because it's in the high 8s right now. It's basically 90,000. But I feel like this can definitely join down. But I feel like crypto is definitely bearish, especially so if we get a break beneath this line, I would like to start seeing some structure on a lower time frame, like the 5-minute, down, and then I'll, of course, so there are lower areas. So it's just like, let me see. I'm gonna say maybe right here. Yeah, kind of, sort of, but not really. I was looking at this right here. It's kind of tough. It's kind of tough. Maybe right here, that's another area. But you got these fair value gaps that's also on the play. But as you can see, as the market ended off for the week, it went into a consolidation. I'm sorry, reading and talking is a skill that I gotta learn. Oh, I thought you were stating it'll be bullish or bearish. Found it funny. Yeah, but so like I was saying, so this is kind of how I take my trades. I'm about to break it down. My bad. I know I've been saying that, but I wait for price to basically reach these areas, and then I look for structure once it breaks this area, or once or once it reaches it. So price is here right now. I would either wait to see price. Let me change the color of this so that you can see it. I can see it, but you can't. So I would wait for price to either come here and on the 5-minute time frame show structure to increase, or come here and on the 5-minute time frame show structure to break beneath. And as a swing trader, my areas of take profit would be these next lines. So this would be my first area. And of course, after price gets here, it may have a good pullback. So I'll probably close my trade here, wait for the next time it reaches this area, look for a structure on the lower time frame, if it's going to increase or if it's going to decrease. That's really how I do it if I wasn't using this indicator. Now, if you are using the indicator, all you would do is look for signals that coincide with these areas. This signal coincide with this area. Why? Because it's saying that right here you had a lot of momentum pushed down. So this is a good sell signal. And what did price do? Boom. Came all the way down to touch it, rejected off, consolidated. This is a buy signal right here, but I would be careful with that, because before I said that there are the 3 things that I said that we need to watch when it comes to the indicator is one, we want the MACD to have a cross. 2, we want it to be in the direction of the trend. We're in the downtrend, so a buy signal would be weaker than the sell signal. Understand? Cool. And then lastly, what was the last one? I forgot what the last one was. It was the MACD, it was the trend, and it was something else. I think I just added that one on. That really might be it. That really might be it. So those are the 2 things that you really want to pay attention to when it comes to the indicator. And it's really simple. It's really simple. The guy that created it, it's been a couple of times where he's like, he showed me he had a buy signal like this, boom, came down, buy signal, and he's taken the whole trade up, waited for the next down signal, and then sold there. So if you got any questions about the indicator, definitely let me know. The indicator is called TPA-OG. If you want access to the indicator, join my Telegram. I'm gonna send you the information. The signal on the 1 hour says to short. So how do you enter on what time frame? You enter on the time frame that you're on, but you make sure that the confluences line up. So right here, this says short. What also did we see? We said that we want it to be in the direction of the trend. Price is in the downtrend. As for the most part, as you can see, price is in the downtrend when it comes to crypto. So it's in the direction of the trend. You also had the MACD right here. The MACD had a rejection off of this line. You either want a cross or a rejection. So you had a rejection off of this line. And so you had the MACD in confluence. You had the signal in confluence with the trend. You take the trend and boom, you made money. And that was with just the minor areas of liquidity that we marked. As you can see, I did that. I marked these lines in what, 30 seconds? I marked these lines in 30 seconds. You mark the areas that you want on the higher time frame. The higher time frame is the boss. The higher time frame is the boss. It tells you the actual direction of the trend. What you don't want to do is go to the 5 minute. Look, so I'm gonna go to Bitcoin 5 minute. I'm gonna go to Bitcoin 5-minute, and right here you're gonna be like, oh, there's really nothing going on. The market's consolidating. There's no trade opportunities. Correct. And then you're gonna go here. You're gonna be like, oh, but I see that price is in the downtrend. Price must be continuing the downtrend. And all that you're seeing is this. What you're not understanding is this is just one candle on the hourly. This is just one trade with trend. Discuss crypto. Trading with trend. Discuss crypto. What do you mean? The MACD had a rejection. I'm gonna go back, but you have to understand that the smaller time frames, these candles are these movements are just one candle. So when you see, oh, okay, it's in a downtrend, price must be in a downtrend. Then you go to the higher time frame, as price is in an uptrend. You're like, I thought the price was in a downtrend. Yeah, it was in a downtrend for that candle, but overall, price is in a uptrend. You just caught the trend, or you just see the trend of one candle. You want to see the trend of the overall market. If price is in a downtrend, the down candles are going to have a stronger trend than the up candles. So, I don't like how AI. I kind of feel like you in here talking to me funny, trading with trend, discuss crypto. Like what you mean, bro? You trying to talk to me funny, bro? But let's go back to the higher time frame. Let's go back to the 1 hour. And let's go to, I ain't gonna lie to y'all. I don't care for Bitcoin. Most people, oh, I love Bitcoin. I think you love Bitcoin just because it's expensive. Bitcoin and gold are like, oh, it's freaking annoying. Freaking annoying. Don't understand how you like it. But I'm gonna show you here how you mark up the lines and how the lines tell you which signals to take. So I'm just gonna do this real quick. Boom. I see, why did I put this line here? Price rejected off of this line. Price rejected off of this line. One, it looked like two times. It tried to get up there, it didn't. Came down, tried to go up there again, it didn't. This is an area of liquidity. I am also going to put a line here. I see that price tried to hit it here, it didn't. Had a stupid rejection off, did the same thing, finally broke through, came back down, rejected off of this area as well. Rejected off of this area, came up, rejected. So this is another area. This is another area. You have this. This is another area. This is another area. You have this. This is a volatile area right here. This whole thing right here is a volatile area, but I'm not marking that. I'm not marking that. So we also have, boom, this area. My computer been making weird sounds. My little thing's been making real sounds. Y'all hear that? It's weird. I think it's something caught in the motor. I have to take it apart. But boom, these are the areas of, I call these institutional areas. Areas of liquidity, institutional areas, support and resistance, whatever you want to call it. But these are the areas that, as you can see, that price has reacted from previously. These are the areas in more recent times that when price continues, price should also react at. These are also the areas to where price should react at. And that's why you don't want to go all the way back and be like, oh, well, price also reacted here, so I'm going to put a line. No, that's not recent. You want to be recent. You want to see where the institutions are currently. Yeah, I used to, I was doing that all the time, but you know what's crazy? Like people started to try to take advantage of it. Like, they didn't understand how to trade, and they were just buying in blindly. Like I want you to understand how. But absolutely. We're gonna do it during the week when I'm not busy. Get on, take a trade live. We're definitely gonna do that. I've had good days with this. I've had bad days. Yeah, I can help you. Shoot me a follow. I can help you. It's all there. Actually, let me make sure that, give me 1 second. But drop whatever questions that you have about trading, about the indicator. Drop it all in the chat. Drop it all in the chat. One second, I'm sorry, y'all. I wonder why is it doing that? That's so annoying. All right, screw it. Are you new to trading? You know if price is gonna go up or down by market structure. So, Mary, how new are you? How new are you? Like, do you understand market structure? Do you understand trend? Do you understand pattern? Because what you want to understand when it comes to this is trend. TPAOG is trend and price action. It goes off trend, it goes off price action, and it goes off volume. You're gonna see these indicators pop up when you have an increase of volume. When price action is matching, it seems the price action is matching the model that it should, and so on and so forth. So, like, look right here. This is a valid indicator. This is a valid signal right here. But it didn't play out. It didn't play out because, just as you can see back here previously, price didn't break past this area. It was trying to for a while, but price never broke this area. But what do you see? You see that in a uptrend, what do price do? It make higher highs, it make higher lows, it make higher highs, it make higher lows, and then what happened? It made a higher high. So with that is a uptrend. This drawing right here, this is an uptrend. And that's exactly what it did. So when it saw this candle break this structure right here, that was a valid candle. A lot of people probably bought in right here. And the institutions was just like, nope, I need to collect some stop losses. And what did it do? It sold off. It sold off. But that doesn't mean that it's not valid. And you know what's sad is a lot of people are going to, they probably took this trade thinking that, oh, okay, yeah, price is going to go up, which it should have done, but it didn't. Just because, you know, the stock market. That's what I like to say, the stock market. And then we went into a small downtrend. We went back into another downtrend. But this was a very valid uptrend. You had the higher high, higher low, higher high, higher low, higher high. It should have been a higher low and then a continuation, but it didn't. You did not get that. You didn't get it, unfortunately. But you base off, you say you just know the basic candle and the trend, that's it. Well, market structure and price action, like understanding what the candles mean, and market structure, price action, and risk management. I say those are the only three things that you need to know how to trade. Market structure, is price in an uptrend or a downtrend? Price action, what are the candles telling me? And then risk management when you're entering a trade. Yo, what's up, Tyrone? How you doing, bro? I use the 1 hour to mark these because, like I said before, the higher time frame is the boss. The higher time frame is the boss. I am not going to mark up my my thing on the 5 minute because look, I'm about to erase this and I'm about to show you why. People say, oh, I trade on a 5 minute, so I'll mark it up on a 5 minute. That's great, but look at this. What do you really see here? Let's just say you mark these areas of support and resistance. All right, boom. Price made a higher here. This is the low. And this is honestly really hard to read. Of course, like, yeah, this is in a little consolidation, but if you didn't know that, boom, and then you can also say boom. if price breaks this area, this will be the next one, this will be the next one, boom, 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 boom. But then you go to the higher time frame, and all you've done was mark out a consolidation, an area to where you really shouldn't be trading. So that's why you should always mark up the higher time frames. I'm gonna hit these questions in order. So yes, I use the 1 hour or the 4 hour to mark up the chart. I use the 1 hour or the 4 hour to mark up the chart because the higher time frames gives you the strongest signals. It gives you the strongest signs of what the market is doing. With the indicator, I use the 15-minute with the indicator. When it comes to the indicator, I use the 15-minute. I use the 15-minute time frame. I still mark it up, like I said, on the 1 hour, but I take my trades on the 15-minute. Take my trades on the 15-minute. But let me go ahead and mark this back up like I had before on the 1 hour. I think I had boom. This was an area here. This is also an area right here. I'm going to mark this area, and then I'm going to mark this low. And I'm also going to take into account this low right here. Price, it had a rejection right here as well. So these are major areas of institutional areas. That's honestly what I call it. Solana's cooked. I'm dead. I don't trade a lot of crypto, but hey, you might be right. Do I use 1 hour and 15 minutes since I'm also new? What are the 3 things you said that I need to learn? It depends. Okay, so if you are trying to swing trade, yes, you want to use the 1 hour and the 15-minute. If you are wanting to day trade, you're going to want to use the 1 hour, the 15, and the 5. So I'm gonna mark it down just so you can either take a picture. And why is it so big? That's just it's not aesthetically pleasing. Don't care for that. All right, boom. So if you want to swing, oh, why did that pop up? If you want to swing trade, can you see that? You can. If you want to swing trade, you're going to want to mark on the 1 hour. You are going to want to also check structure. Check structure on the 15-minute, higher highs and higher lows. You're going to want to enter. Crap, why can't I spell either? You're going to want to enter your trades on 5-minute. No, I'm sorry. Crap. I'm mixing it. This is day trading. This is day trading. Sorry. So sorry. That's day trading. This is the day trade. You want to mark on the 1 hour, then you want to go down to the 15, make sure that these lines and everything and the structure and everything matches up. Cool. Then you're going to go on the 5-minute. You're going to enter off of breaks of structure, changes of character. I'm going to get into all of that. But these are basically just the rules. I am also going to lock it. And then next we have swing trading. Swing trading is a little bit simpler. Of course, you still want to mark on the 1 or 4 hour. Mark on the 1 or 4 hour. 4 hours really is not needed too much for day trading. You still want to check structure on the 15, of course, but mostly you'll probably be, entering your trades off of the 15, off of breaker structures on the higher time frame, like this right here. Like, let's just use this for an example. If you saw that price came down and it broke past this low again, because if price continues to be in a downtrend, it should respect its highs. So if price is saying, okay, boom, this is the down, now you can't see. Hold on 1 second. Let me change this to yellow. Can you see that? Let me do red. I'm gonna do red. No, I need a color that can be, all right, I'm gonna use this, boom. If price is in a downtrend, it should do what? It should come, why ain't this working? It should come down, it's gonna come up, it's gonna come down, but it's not gonna break what? It's not gonna break this high. is not going to break this high. If price is in a downtrend, it should come up. It can even come up to this high, and then it should continue lower, right? So that's what price should do. Once price came down, came up, came down, broke this high, came back down, you could have entered right here off of this breaker structure. You could have entered, boom, right here off of the close of this candle. If you typically want to do a 2-to-1, where do you put your stop loss? Where price should not go again. You put your stop loss where price shouldn't go, boom, and then you get yourself a 1-to-2. Or a 1-to-3, whatever. With this, you definitely could have did a 1-to-2, I mean a 1-to-3. But you get yourself a 1-to-2 and then boom. This particular case, you would have had your take profit in a little under 3 hours, which is good, which is pretty decent for swing trading. So that is the basis of swing trading. Structure on the 15. If you still want to enter on a 5-minute, you really can do that. But that's basically just how you trade. Yeah, I'm gonna upload it. I'm gonna save this. All of these get saved as well, and I am going to send it in the Telegram too. So if you are in my Telegram community, I am going to send it in there, and you'll be able to get that. So hit the link in my bio, join my Telegram. Yeah, I can. Hit the link in my bio, join my Telegram, and you get the Telegram is free. Everything. Telegram is free and all. Day trade, mark on the 1 hour. Check the structure on the 15. You want to enter your trades on the 5-minute. For swing trades, you want to mark it on the 1 or the 4 hour. You want to do the structure on the 15. And preferably, you want to enter on 15 or 5. Honestly, it really wouldn't matter if you're swing trading, because you're going to be holding it for a little while either way. You're going to be holding it for a little while either way. But as far as the indicator goes, that's pretty much that. I'm gonna go over everything, because of course we got like new people that join. But even when it comes to the indicator, like I said before, one thing that I still do my markups. You never want to enter anything blind. You never want to enter anything blind. So once you have your areas of liquidity, once you have your institutional areas, is what I call these. When price reaches these areas again, all you want to do is make sure that if you get a signal, it lines up with the direction of the trend. You have the MACD and confluence, and it's safe to take that trade. It's safe to take that trade. This is called TPA OG. This is not something that you can just type in and find. You're going to have to be invited. So if you want an invitation, DM me, say, hey, I want to get the thing. I want to get the indicator. I'm going to send you the information on how to get it. It is paid. It's like $50, but in all honesty, you can get that $50 right back your first trade. I got this right back my first trade. Yep, TPA OG. A broker for live trading. I have Forex. I have Forex.com. I use Forex for for Forex trading, and I use Coinbase for my crypto trading. Forex for, of course, Forex trading. Coinbase for crypto trading. Forex 50-to-1. Yes, sir. Yes, sir. I have Webull for regular stocks as well. I have Webull for my regular stocks, like PayPal, stuff like that. That's what I got. Yeah. Have you ever cashed out? Yeah. Come on now. I'm not in this to not cash out. I'm actually sitting in a trade over the week I'm not logged into my broker now, but I'm gonna show you the trade that I'm in. I am in USD CHF. Yeah, this is actually the trade that I'm in. I bought in off of this indicator right here. This one. Price came down. It gave me a good indicator, a good indication. I liked it. Why? Because price has shown that it was in an uptrend. We had a candle break structure, and then we had a good buy signal. Now, one thing that I didn't pay attention to afterwards was right here. Boom. Price had tried to break through here before, and it rejected hard. It rejected hard. So, trade day and swing trading. Comment for more trading tips. What about fees? Well, the fees are put in when the fees are added in when you buy in. So I mean, like, so far the fees has been like $1 or something. It hasn't really been that much. Well, I don't know what you mean by interactive brokers. I don't really get that deep into it. I ain't even gonna lie to you. I don't get that deep into it. I looked up, I said, what is a good Forex broker on Google? They said Forex.com. I looked up some YouTube videos. Forex.com it had good reviews, got into Forex. Boom. Coinbase is very known for being one of the better cryptocurrency trading platforms. Coinbase, boom. And that was literally my process. I didn't go too deep into it. But this is a trade that I took. And I'm sitting in this, I'm gonna have to wait for this to open back up Sunday afternoon. But of course, I would like to see price continue. But back here, we did see price reject off of this and have a good sell-off. But I bought in this because we had price break structure, and then on top of that, we had a buy signal. So volume increased, the price action matched. On top of that, if we look right here at the MACD, we had a cross. It's in the direction of the trend because the trend is up. So, you know, it gave me all of the better buy signals. So I bought in. So right now I'm sitting a little bit into profit, not where I want to be, of course, because right here, this is my this is where I'm going to place. I want to see if price can break through here. In all honesty, this is where I'm going to like place my stop loss and just like let it trail, see what it want to do. If it comes back down, hit my stop loss. I made my full TP anyway. Yes, the MACD had crossed when I entered. Like, look right here, you can see. So this is the indicator. So the MACD had already crossed. Boom, you had a brand new cross, and that's what you want. That's what you want. Why didn't I take this sales signal? Why? That's not in the direction of the trend. The trend is going up. The trend is going up. Yeah, you also had a MACD cross, but like I said, take signals in the direction of the trend. It's gonna be your best friend. It's gonna be your best friend. 1 second. But yeah, I'm gonna go back to crypto since crypto is actually moving. Well, it's not moving. Actually, all of crypto is in a consolidation. But who wants me? Why is the lights flickering? I don't know, man. It's a lot of Nosferatu out here going crazy. But who wants me to like really break down, start at the beginning, and go into the details of trading? Like, who don't understand? Because I feel like there's a lot of people that they understand how price moves, but they don't understand where to buy in. And it's really simple. It's really simple. You buy in and it breaks the structure. Like, look here, I'm about to make this bigger just so I can have this area. If price is in a uptrend, it's gonna make higher highs. It's gonna make a higher low. It's gonna make a higher high that breaks this high. It's gonna make a higher low or an equal low. It can do either one. It can come down here and it can continue, or it can come here and it can continue. Either way, what is it gonna do? It's going to respect its lows. And a uptrend, price respects its lows. Oh crap. Oof, sorry. And a downtrend, you're gonna have a low, a lower high, a lower low. It can be a equal high. As long as it don't break this area, and then it should still go lower, or it can be a lower low, as long as it still goes lower. And a downtrend, price what? And downtrend, price respects its highs. Simple. Where do we not trade? Consolidations. Boom. We don't trade consolidations. Why? There's no money to be made in here. The market is just figuring itself out. It's funny. I call this adolescence. Call this adolescence. But that is consolidation. We don't trade in the consolidation. We trade in the uptrend or we trade in a downtrend. These are the only two. Where do you buy in? You buy in here when price breaks this structure. You buy in here when price breaks this structure. You buy in here when price breaks this structure on a uptrend. Or there's another option. You buy in at the pullback. You buy in here at the pullback. Or you buy in here at this pullback, at this second one. Or you can buy in here at this pullback. How do you know when the pullback is over? When price starts to make what? Its higher highs and its higher lows and its higher highs and its higher lows. Because look, what is this up structure and this down structure still consist of higher highs and higher lows. So in this, you're going to have a mini high, a mini low, a mini high, a mini low, a mini high, a mini low, a mini high, a mini low. You're going to have all of those. You're going to have the same in this down structure. You're going to have a mini low, a mini high, a mini low, a mini high, a mini low, a mini high, a mini low. You're going to have that. Once you see those mini highs and mini lows end and price breaks, and then you start to see those many highs and many lows and many highs and many lows start again, that's when you enter. And then that's when you go until you see that breaks. And then what? You start seeing, repeat after me, many lows and many highs and many lows and many highs and many lows. Keep it simple. Keep it simple. Don't overcomplicate it. Don't overcomplicate it. It's not that bad. It's not that bad and it's not that hard. What's hard is mental. I really wish that I had a way, or I had like a better platform to sit and just talk about trading psychology with people, because that's what's real. Because it's easy to understand what I just said. I'm pretty sure all 7 of you understood what I just said, but it's different when you're looking at this. Why? Because these candles aren't as straightforward as boom, 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 boom. These candles carry emotion with them. I know. Each of these candles got a little bit of emotion with them. And that's why you can't let it get to you. I'm gonna unlock this. I'm gonna move this. Boom. I'm gonna lock it. And then I'm gonna unlock this. Boom. Move this up here. I understand. Somebody told me once, the teacher that I paid for him, he told me, he said, you cannot be more emotionally invested in your trade than you are financially invested. If you are more emotionally invested in your trade, you are going to FOMO yourself out of good trades, FOMO yourself into bad trades. Are they female candles? I'm dead. They might as well be. I'm dead. They might as well be. Don't overcomplicate it. So look, I'm about to break it down. All right, I'm about to show you real life example. I'm gonna mark this somewhere. I'm gonna mark this right over here. So we see that right here, prices in a uptrend. Let's go down to the 5-minute. I want to look for Actually, you know what? I don't even need to find that. Like, look at this right here. Look at this. This trend is a trend in itself. Look at this. Boom. You see this? This is a candle. This is a candle. This is a candle. This is a candle. These are candles. What you're seeing is the candles. What you're seeing is the trend of these candles. What you're seeing is the trend of these candles. Actually, I'm about to try to go to the 1 hour. Why does my screen look like this? Okay, it was looking a little weird, looking a little wonky. I'm going to try to find a decent sized candle that's not like volatile. That wasn't a volatile candle. See if I can highlight it. Okay, let's do that. And then let's move this over here. This was November 24th. I'm gonna go down to the 5 minute. And I'm gonna see if I can find that candle. That was November 24th. 29th, I'm getting close. 27th, 26th. Boom. Look, this was this candle. This was one candle on the 5 minute. Imagine what this looks like on the 1 minute. Imagine what this looks like on the 1 minute. So if this is one candle, this is another candle, and then this is another candle. This consolidation, these are a range of candles. You know how when you be seeing like candles, and you be seeing them wicks and stuff on a higher time frame? That's all this is. That's all this is. All you have to do is find the structure broken down off of that higher time frame. Where do you enter? You enter on the breaker structures. You enter on the breaker structure. So like right here, boom, you see price starts to make structure again. Higher highs, higher lows, higher highs, higher lows, and then it breaks. You have a down candle, and then it breaks up, and then what do you have right here? Higher highs, higher lows, higher lows, higher highs, higher lows. You enter on the pullback if you want. You enter on, or you can enter on the break. Either one of these is fine. Either one of these is fine. If you want to enter here, you can. You want to enter at the break, it's fine. All you have to do is just wait for the structure. It's all about structure. It's all about structure. And of course, risk management. Because you can, if you make one trade, if you're risking 100 to make 2, that's pretty good, right? That's honestly a dream for most people because you may not have enough in your account to even risk 100 safely. But if you're risking 100 to make 200, that's great. Let's just say that first trade, you are up, boom. The next trade, you are up, boom. The third trade, though, however, you lose. So you're up 2, 4, and now you're down 1. So you're still up 3. You're still up 3. 1, 2, and 3. Even if you lose the next one, you're up 2. You make the next one. Now you're up 4 again. You make this one. Now you're up 6. You make this one. Now you're up 8. You lose the next one. Now you're up 7. You lose this one. Now you're up 6. But you're still in profit. You are still in profit. Don't let those many losses, don't let this loss make you feel like you don't know how to trade. That is not true. If you are trading, you have to accept the randomness of the fact that you are going to fall into the percentage of times that your trade is not going to work. If you are trading and you realize that, okay, this has a 60% chance, you do realize there's a 40% chance still that it's not going to work. Most people think that they need to just live in that 60% zone. That's not realistic. That's not realistic. You're going to fall in that 40% pretty often. Close to half the time if you think about it. Close to half the time if you think about it. Wall Street, the people who, the institutions that move these, they only have a 50% chance of making it, which means half the time they're wrong. Half the time they're wrong. How do you really expect to be right 100% of the time? So when you get online and you see these people that are, oh man, I made $137,000 and I have a 97% win rate. That's great. That's great, but don't fall for the hype. I even made a video making people don't fall for the hype. It's not like that. Accept the randomness that you're going to lose 2, maybe 3 times in a row. But when you get those 2, 3 wins in a row, that's all that matters if you have proper risk management. If you have proper risk management. So, that's all I have for today. I am going to go a little bit more in depth, real quick. I'm gonna just go over what I told. If you want the indicator, message me. Tell me that that you want to join the Telegram community so that you can get access to it. The indicator that gives you the signals. This gives you the buy and sell signals that I've been making. I ain't gonna lie, I've been making pretty good money off of this because I've been also working. But this indicator is $50. If you want access to it, I have to give you the owner's information. Through me, you get a discount. It's $50 instead of the full price. I think the full price is like $100. So it's $50. You can get that $50 back in a single trade. It's really not that crazy. Sometimes you gotta spend money to make money. I'm new to everything and I want to try today. Please, I use TradingView, but message me. The Better Joe, just DM me and I got you. DM me and I got you. How I know what trades to take, I still do my top-down analysis. I mark areas to where I see that price has rejected. Price rejected here, price rejected here, price rejected here, price rejected here. Where is price reacting to? Sorry, I had a message pop up on the front of my thing. Where is price reacting to? Boom. And then these are the areas in more recent terms that I feel like price is going to react to now. As time moves on, these older areas become invalid. So you don't want to hold these lines that I have right here. You don't want to hold these forever. You're not going to want to be looking at this in January. Those lines are now invalid. These lines these are for the next 3 days max. These are for the next 3 days max. So you make these areas if you're trading off of the indicator, the signals that it gives you, you want to take the trades, the signals that match the trend. Price, you see that price is in a downtrend, boom, it gives you a down signal, really good. And as you can see, it smashed your take profit. An uptrend signal, I wouldn't take it. Why? Because price is not in the uptrend. The next thing that you want, the confluence that you want to have a really good signal is the MACD that comes with it. It's called TPA MACD. This is I never told y'all this. I'm so sorry, but it is a 2-part indicator. TPA OG, TPA MACD. You want to have a smooth cross. That's what I forgot. I'm sorry. But you want to have a smooth cross. You want to have a cross with the MACD lines. You want it to be smooth. You don't want it to be sharp. What I mean by sharp is you don't want the MACD to look like that with a cross. That's not what you want. You want it to be smooth. You want it to be somewhere rounded, kind of like this. And then that's when you have the smooth trends down, as you can see. So, and then that's really it. That's really it. It's really simple. So, okay, but the indicator shows a buy on the 1 hour and it don't show on the 5 minute. Yeah, you're not. This indicator takes away the whole top-down analysis portion. It takes away the whole top-down analysis portion. If you want to trade on the 5 minute, you do exactly what I just did here on the 5 minute. I'm doing it this way because I am swing trading with this. I'm swing trading with this. If you want to do this on the 5 minute, you do it exactly what I just did, but on the 5 minute. I'm gonna go out. I'm gonna go out and show you. Look, you really can't see the further back you go, the more they just kind of like pop up. They don't generate where they would have generated. But like, look, even like right here, You have a sell signal. This would have hit your scalping TP right here. You have a buy signal. Back up to this area of rejection. As you can see, this hit it. This sell signal, this hit. This buy signal, this hit. You had two sell signals back to back. And of course that went, that made, this made. All of these signals pretty much did what they needed to do. And then you hit this consolidation. Hold on 1 second. Oh, sorry. Okay, I had a message. But yes, that's basically what you do. And so yeah, like you still mark those areas. You mark them wherever you want to mark them on the 5 minute. See, on the 5 minute now you have this area. If I'm just looking at this time, let's just say like all of this didn't exist, you still have this area. And honestly, anything within here, once you get a signal on the outside of this, this would have been a really good opportunity. You had these two signals pop up after you had a rejection off of this area. And what did price do? It continued downwards. You had a buy signal after price came down here, and then you saw price slow down. You started getting really wicky. I'm gonna zoom out so you can see it. Then you had a buy signal, and what happened? It went back up to test this area. You had these sell signals, and then it sold off. So it's the same. It's exactly the same. You mark the areas to where price has reacted recent times. I'm gonna say the last maybe 3-4 days. You go back 3-4 days. You mark those areas. You wait for price to reach those areas. You get a signal in the direction of the trend. You get a signal that matches the MACD's performance. You also get a signal that matches the institutional areas. It's a go. It's a go. Like I said, we just had a lady pass her evaluation using this. I dang near may want to take another one. I told myself that I was just going to really be trading with my money, but hey. But yeah. I'm probably going to try to get on again tomorrow at some point and go over it again. Talk about how to trade, like using trend lines. Because like I said before, there are 3 ways to trade. You can trade using trend lines, you can trade using support and resistance, and you can trade using indicators. I kind of do a mix and match. But yeah, so that's all I got for today. I'm definitely going to save this. I'm sending this in my Telegram group. I'm also going to post this on YouTube so you can have a reference.